All right, my friends, welcome back to Real Estate Bites. We'll be happening here every Friday at noon on Facebook, LinkedIn, and Twitter or X. Every Friday, we endeavor to bring you guys some local real estate statistics, news, insights, bringing information to you so that you can have a more thorough perspective as to what's going on in real estate, what it's like living in this universe. And hopefully you bring away some value from it every week. And if you do so, I would ask you to please share this with friends and family. Let them know this awesome thing that we got going on here every Friday at noon. This is episode number 29 here as we wrap up week number 7 of 2024. These first 6 weeks have gone by way too quickly. And I imagine the remaining, what would that be, 45 weeks are going to go by just as quickly. So without further ado, let's get into local real estate statistics. That's the wrong button. Here we go. All right. So taking a look here, over the past week, the current inventory on the market, this is single family homes and condominiums. I do not include multifamily properties, nor do I include mobile or manufactured homes in this count. The current number of single family homes and condos for sale in Lorain County is 338. So inventory picked up just a bit. Nothing to get excited about for sure. The number of homes that closed and transferred last week was 50. The median square foot of those homes was 1,501 square feet. Median value was $207,839. That's an interesting number. The median square foot price was $133.82. Once again, the reason we use median versus average is because the median values basically discount the outliers. So very large homes, very large prices, or on the other end of the spectrum, very, very small homes and very, very small prices. So when you use median, it is a little more indicative of the typical sort of home. And as you can see here, when we look at, say, even median square foot, you can see they're all in a pretty similar range. The highest one was here during episode number 27 at 1,800 square feet, but the rest of them, 1,600 square feet, right? You can see median home value pretty much in a similar sort of range. Median square foot value, same thing. So that's why we use median. Sale price to list price ratio, 98%. Again, we're seeing somewhat of a trend here. Looks like the market is correcting ever so slightly. Not anything, like the inventory. It's nothing to get excited about, but we are not seeing price appreciation like we did a year ago. If we go back, let's take a look at the end of last year. You can see this is here. This is episode 14, and where we started to see significant or consistently under 100%. And we moved into this year, and we have seen only above 100% one time in 2024. This last week's sales, those houses that transferred last week spent an average time on market of 46 days. And the interest rates opened this morning at 7.03% for a 30-year conventional note. So interest rates, well, we saw, we got down, the most recent bottom was just a couple weeks back at 6.63. If we look at last year, that's kind of where we ended up here, the end of the year, 6.62, 6.63. And we have slowly climbed up to back to 7%. Last week's high price was $746,565 in Avon Lake. That was new construction in Port West. There were no pictures online for me to show you, but that's okay anyways, because it was probably boring. So at any rate, those are last week's statistics. As I always ask, if you guys have any questions about the statistics that you see, if there are stats you might be interested in seeing, please let me know. And I will start looking for those statistics and bringing you some analysis there. Okay, so in past episodes, I have talked about wealth building. I did one episode specifically about real estate investment, and I talked about single family, multifamily, commercial, and I briefly mentioned REITs, or real estate investment trusts, in that episode. And I talked about how I would come back in a later episode and discuss REITs a little more in depth, but I wanted to bring on someone who has experience in the buying and selling of REITs. And so I went and I found a friend and a trusted advisor, Mr. Bill Ferber of True Wealth Design. And I had him, he and I pre-recorded a conversation earlier in the week where we discussed REITs and what they are and what they mean and how to get into them. So without further ado, let me get into my discussion with Mr. Bill Ferber earlier in the week. Very good. All right. Welcome, Mr. Bill Ferber, to Real Estate Bites. How are you doing today, sir?
I'm well, Jonathan. How are you, man?
I'm doing great. So for everybody out there, Bill here is a wealth advisor at True Wealth Design. I'm going to put his contact information here across the bottom. So post-program, if you guys have any questions, this is the man to reach out to. So, Bill, I asked you to come on the program today to talk about real estate investment trusts, also known more commonly as REITs. Yeah. So first and foremost, man, tell us what exactly is a REIT?
Yeah, so a REIT, as you touched on, it's a way that people can invest in real estate without actually having to go out and purchase the real estate. So think of it as, a pool of various buildings, whether they're, commercial properties, this, and that, and it all pulls together. So you can go out and buy an individual REIT with the emphasis of focus on real estate, but not actually going out and buying a brick and mortar place of your own.
Right. So, and with REITs, from what I understand, you have all types of real estate. So you're talking about strip malls, hotels, what else? I mean, and basically any and all kind of real estate. So it's not just single family. It's not residential. It's most oftentimes it's large commercial real estate.
Yeah, that's correct. So most REITs typically are going to be focused on commercial properties. As you touched on it, like strip malls, office buildings, stuff of that nature, because the whole idea is what they're going to drive their income on is, mortgages, stuff of that sort. So you got to think big picture, right? If you're looking to, if you're a large wirehouse company or whatever, large brokerage house, and you want to provide a REIT option for, investors, you want something that's going to pool some big commercial properties together. So it is a big combination of all that. And again, the advantage there is most REITs, the publicly traded ones, at least, you can go out and buy on the market exchanges. So, if you go on whatever, brokerage firm, if you go like a Charles Schwab or a Fidelity and you buy some REITs there, they're, the publicly traded ones are available in that form. So.
Excellent. So Bill, why would someone purchase into a REIT versus going out and buying real estate the traditional way? Why buy a REIT instead of saving your money and going out and buying a single family home to rent out?
Well, I mean, not everyone has the experience you do, Jonathan, when it comes to identifying single family homes and, really knowing that market, right? So what a REIT will do is, first and foremost, it gives diversification. So that's a big thing in our world, diversification, kind of the old, you don't want to put all your eggs in one basket type of thing. So what a REIT does is it gives someone that opportunity to go out and, again, buy an investment that might have a, pool of commercial properties, maybe in the Southeast or Northeast, wherever, right, geographically located. And the way REITs work is that they pay shareholders dividends. So what that does is essentially, when the companies are making profits, then they in turn pass these dividends on to the investor, and it's a way to diversify one's investment portfolio.
So those dividends, in a sense, are the cash flow in this particular type of real estate investment. Another thing I wanted to kind of chime in there too is with real estate moves slow, right? So you buy a single family home, it takes a certain amount of time to get into it. And then in a typical market, which we haven't seen here in the past 4 years, if you want to sell that real estate, It takes a little while. So even in this seller's market, if you want to sell your home and put it up for sale, it's still going to take you at least 30 days, on average, to maybe 90 to 120 days to liquidate that asset and realize your return or your proceeds. But how quickly can people get in and out of REITs?
Well, that's a great thing. Like it's traded like a stock, right? So, I mean, you can go and you can buy, you do some research, buy a REIT. And if you think things are going down for whatever reason, you want to sell that, you can do that, right? So that's the advantage it has. One of the advantages it has over traditional real estate is that liquidity factor. But just like real estate, it is susceptible to the disadvantages that owning real estate has, is like interest rates. I mean, you touched on this past couple of years with interest rates and homes and so forth. I mean, people's buying power has gone down as interest rates have rose, and those raising interest rates also affected REITs. So, you look back into the COVID years, that first year of when that all came around. That year, 2021, real estate was actually still pretty strong, right? I mean, the values. I mean, people were, houses were moving, and people were buying. REITs, on the other hand, because of the liquidity of the nature, people saw that, okay, we're not going to work, we're staying at home, we're being told to stay at home, and so therefore they're selling out of their REITs. So you look at like real estate market, the value of pure real estate back then versus the value of a REIT, and there was a difference as to that liquidity availability through a REIT. So that's something that, again, it can be a pro and con, depends on whatever market fluctuation you're in.
So who do you think is the ideal sort of shopper for a REIT? Who buys into REITs typically? Who do you think this might work out best for?
Gosh, that's a great question. I've never really dove into the dynamics of that. I would say anyone that's invested in the market, and when I mean invested in the market, has maybe some sort of portfolio consisting of stocks and bonds. Whether you do that on your own or you work with an advisor, it just, someone's looking for diversification. It is a diversifying fund. So think of diversifying funds. When the market goes one way, diversifying fund goes the other. So it gives you that opportunity, maybe in like a down market cycle, to get some benefits. So really, I mean, anyone that's investing currently, anyone that's looking to expand or diversify their investment portfolio, I would say do some research and determine if a REIT, makes sense, and given where we are in just the market cycle. So,
Bill, you just said the word research twice in answer to the last couple questions I had for you. So, how does somebody analyze a REIT if someone's considering diversifying their portfolio by getting into real estate, but they don't want to be a landlord, they don't want to be in charge of managing properties? What kind of research should they do? Because it's not like looking at a single family home and determining whether or not you can buy this thing and have it cash flow at a market rent. That you kind of have to analyze this like a stock, because, well, essentially it is a stock, right? REITs are stocks. So you have to analyze it like a stock. So what sort of tips do you have for people out there who might be interested in REITs about how to actually analyze this before they go and pull the trigger and put some of their hard-earned money into one?
That's a great question. Yeah, I can't emphasize that enough. I mean, when you're buying anything, especially when it comes to investing, whether you're the most skilled investor or just getting into it, you definitely want to do your research. You want to make sure that you're not only buying something that fits your portfolio, but we don't expect people to wake up and act like Warren Buffett. That's not going to happen. But there's a lot of ways out there that you can research whatever it is you're purchasing. In this case, a REIT. Google, right? Google's a good place to start. Yahoo Finance, anything like that. Morningstar. Morningstar is common in our industry, and it's available to the public. You can go in there. You can start doing some research, some reading. I mean, the Wall Street Journal, that's always going to have information. I mean, everywhere on the internet's going to have a lot of information, but if you focus on kind of like financially driven websites, I think that'd be a good place to start. One of my favorite that I default to for just basic stuff, because I think they do a really good job of simplifying it, is NerdWallet. I have to say I'm not by any means connected to these, so it's no No promotion in that sense.
You're not getting paid by these guys,
I'm
are you?
not getting paid. No, that's not happening. I'm a fee-based advisor. So, but at the end of the day, like I would say, if you want to do it on your own, start there. Another way, talk to a professional. I mean, I had a conversation earlier today with a couple, and they, the end of it, they were just like, we don't know where we are. We wanted to get a non-biased point of view from someone that does this each and every day. So, I would say that would be if you do the research on your own and you feel like you're like, yeah, I'm understanding this, but I'm still like, then hey, reach out. That's why people pay us to work with them, because we do this each and every day, and we have these conversations each and every day. So I would say one of those two options would be. But first, again, just simple Google. Start reading up on it. There's a lot of stuff out there. Most publicly REITs are registered with the Securities and Exchange, SEC, Securities and Exchange Commission. So again, if you want to go from like a place that's not going to lead you astray, SEC governs everything that happens when it comes to securities. So that would also be a good place to go.
Yeah, and if people want to dig in that deep, I mean, they're getting, that's beyond the basics. Now you're talking about really researching fundamentals, and now you're looking at prospectuses and seeing who, where they're buying their properties. And then you got to dig in deeper into, are the properties that are being bought in markets that are growing or declining or blah, blah, blah. So that, I played with that once, Bill, and I'm not going to lie, man, that is a heady task to take on, man.
That can be a bit granular. I mean, for the surface level, I always look at what's it going to cost me, right? So expense ratios, that's essentially how much it costs to own a fund. And I look at horizon, what was the 1 year, 3 year, 10 year? Keeping in mind, and this is, I can't emphasize this enough, past returns have no guarantee what the future is going to bring. So, when you're looking at something that may have done well, you got to kind of look back into where we were again, what was going on in the world at that time? What was the economy like? What were interest rates like? All this stuff. Within the last couple of years, this is the first time in, going back to probably early 2000s that we've really had to deal with, interest rates. And even then, those interest rates were going down because it was, we were coming off of the dot-com era. So, when you're looking at researching these things, 30,000 feet in the air, surface level, however, if you don't want to go granular, expense ratios and just past returns. But, again, it never hurts to ask someone, reach out to someone that does this as a professional in this industry and does this for a living, because he or she will be able to give you, they should be able to simplify what it is that you need to be looking for when investing a certain fund.
Yeah, no doubt. I think that REITs are a fantastic way for people to diversify. Specifically, if you want to keep your assets essentially on paper, and you don't want to go buy brick and mortar, like you said, you don't want to go own a building and a plot of land and have to manage that, be a landlord, worry about evictions and stuff like that. Let other people do that. If you don't want to take on the task of putting the time in to really dissect a specific REIT and figure out all the stuff, then give Bill a call. That's what Bill does. He can look into those dirty details for you and make it easy. Hey, man, I appreciate you coming on and sharing this with me today. Thank you very much. And I look forward to running into you one of these mornings.
Yeah, Jonathan, I appreciate it, man. I really appreciate you letting me come on and talk with you about this. And yeah, we'll get together in gloom sometime soon.
That sounds great, man. Hey, you have a great one, Bill. Take care of yourself.
You as well.
Thanks again.
Thanks, you too. Take care.
Mike was muted. That was Mr. Bill Ferber of True Wealth Design. I really appreciate him coming on with me and talking about REITs to you guys. I wanted to talk about, I thought this was a pretty important topic of discussion, because REITs, they've been around a long time, but they really exploded in popularity post-pandemic. And a big reason why was because as in that low interest rate environment, as real estate appreciated and appreciated rapidly, the returns on REITs were significant. And I mean, so significant that people were selling out of bond positions. And when I say people, I'm talking about the big players in the investment space, you know, the Blackstones and whatnot, the BlackRocks, the Vanguards, you know, they were selling out of bond positions and buying into REITs. I mean, billions and billions of dollars going into these REITs so that they could realize returns for their investor clients. And, you know, I began seeing REITs all over the news all the time. For that matter, you know, before this came on, I just wanted to take a look and real quick see how quickly I could find some story about a REIT. And so I just went to Yahoo Finance. I did this right before we came on. I started scrolling and I got to right here. Healthcare REITs showing strong performance in February. So right there, healthcare REITs. What is a healthcare REIT? Obviously, after watching Bill and I talk, you know that a healthcare REIT is a real estate investment trust that focuses on purchasing hospitals, medical facilities, things like this, right? So it's quick to find REITs, and there's a lot of advertising for REITs. I see a lot of, you know, investment sites and articles pitching REITs. Oftentimes they are written by the people who run those REITs because they want you to buy in. And while they can be an excellent investment decision, they can also, they have as much risk as anything. You know, you really need to know what you're getting into. We talked about research, and the research can be exhaustive out there, guys. You know, you're looking at so much data. You really need to know how to analyze them like you would a stock, because they are a stock. You need to understand fundamentals. You need to understand market patterns and market growth and things like that. So, you know, if you really don't want to spend the time to dive in, call a pro. That said, that's it. That's a wrap on Real Estate Bites number 29. I appreciate you guys joining me, and hopefully we see you next week. Until then, take care of yourself. Take care of one another. I love you, people.